Hello everyone, it's Nicola Downs, Trentham Invest. It's Friday the 10th of July 2026 and today I'm going to talk to you about investments, about portfolios, about getting the right mix of investments together for the financial weather. And yeah, it's hot out there. It's hot out there. It's literally hot with the weather, which we're all experiencing 30 degrees this week, and it's forecast for the same next week. And then for those of you who want the rain, apparently it's next Saturday. What else is heating up out there? Well, some doggy milestones. You know, they're heating up. Many of you know that outside of work, I show dogs, well, one dog, Paris, and it's a passion that I've got into with her, and I started it about a year and a bit, maybe coming up to 2 years. And over the past few months, I've just been reminded that success is, whether you're in the show ring or business or investing, it often comes down to a few simple principles. Take your time and focus on doing things properly. Preparation and practice matter far more than the few minutes live on stage. Learn what works best. Use checklists rather than relying on your memory, because you will forget something. And surround yourself with people whose knowledge and support help you continue to improve. And perhaps most importantly, when you've got all of those under your belt, believe in yourself, believe in your dog, celebrate the small wins, and remember that even when things don't go perfectly, every experience is an opportunity to learn and to do better next time. So with all of that, I'm delighted to say that for all you fans following me and my dogs, is that this paid off in Blackpool this year at the championship show in June. We won special beginners in the breed. We qualified for the group and we were placed third in the group out of 24. So just a real delight. Plenty of similarities between dog showing and investment, and success rarely comes from chasing quick wins, but from patience, preparation, consistency, and having the right people around you. As always, this time of year brings our latest review and update on portfolio strategies. And we take a strategic approach, a long-term approach, as opposed to keep jumping around, trying this, that didn't work, try something else, and you're then on this continual cycle of worry, anxiety, and you know, you feel you've got to be constantly on the case. So our team has continued to analyse the key economic trends, political developments, market movements, and we continue to draw insights from leading investment specialists. We have close relationships with them throughout the industry, and it helps us to adapt changing conditions and focus on opportunities rather than short-term headlines. Over recent months, we've seen a number of things, you know, tension in March, recovery after March, you know, highs at the beginning of this year. It can be a roller coaster. That roller coaster really stems from newspapers, headlines. They're even, you know, more so now. Social media, you can just get them on your phone, you can get them on your computer, you get them everywhere, and newspapers, and it's just a frenzy. Everyone's fighting for their own story to be the headline. I think the competition's even worse now than it's ever been, harder than it's ever been. And so the stronger the headline, the more readers they're going to get. So what sort of things are going on? We've got conflict in Iran and oil prices. Tensions there, they continue. We've got continued rise of artificial intelligence. We were talking about this week where, you can rely on AI to do the work for you, but what you don't want AI to do is the thinking for you. Because if you allow AI to do the thinking for you, then you're going to lose your own brain, you're going to lose your own thinking, your own mind, and your own human. So, our brains are the most valuable things that we have. It's our thinking tool. You want AI to do your dishes so that you can use your creativity to make a painting, to do some problem solving in another area, creative problem solving, as opposed to get AI to do the painting for you and you end up doing the dishes. So just really think about where you're embracing AI in your life, because that's the direction you're going to put yourself in, no one else. You're going to put yourself in that direction, so just be careful. Gold reaches record highs, and the perception of safety and precious metals, it's got rising demand there. We've got other concerns around inflation, global conflict, all these negative stories about scarcity and worry just make people go and grab safety nets, and gold is a big safety net. People also like to buy things that are performing well. They will go for the highest returns. You'll end up buying high and selling low. Gold is going up. People think, I've got to get on the wagon before I lose out. And then you get the fear of missing out going through you. So again, just be careful and mindful about, if you're buying things on your own, where are you actually putting your investments? Are you just going for the seeming winners? So let's have a look at some facts. So we'll move on and away from those stories onto some facts. This is what we like to use in our business when making decisions. We like to go on facts, figures, reality, real data, real things, as opposed to being emotionally led. So cash and money markets. Cash in December 25 was 3.74. The yield you can expect to receive on cash of June 26 is now 3.91. It shows that the yield has slightly increased over 6 months. So that's cash and money market. These are cash lookalikes in a portfolio, as opposed to hard cash rates. Hard cash rates, there's the current Bank of England base rate is 3.75. If you then go out to the world and go out to the market and ask for what's the best 1-year fixed rate I can buy in hard cash, that's with Marcus by Goldman Sachs, it's 4.9%. We use a platform called Quilter a lot, and within that platform there's a hub, and in the hub is a collection of cash bank rates. It saves you going hither and thither and 6 different cash bank accounts. We looked on there for the best 1-year fixed rate, and that is 4.6 with AI Rayan. Inflation, we've got consumer price index that rose by 2.8% over a year as of May 26, and it's unchanged from 2.8% in April 26. Fixed interest, we've got rates at 5.4%. The expected yield now is 5.77, so that's gone higher. So it's a low risk investment, and the expected return is higher from there. Majority of our clients at Trentham fall into 2 categories. Those who are in retirement and are looking at their wealth, they've got a finite amount and they're living off that wealth in drawdown or decumulation. And their thinking is to get a better return from those investments than cash and have a good balance between the two. They want to make sure that their wealth outlives them. Those clients fall into a band of risk between 3 and 5 in the majority. Our scale is 1 to 10, 1's low and 10 is high. For a risk 3 portfolio, 24% of that portfolio is allocated to cash, to give you some idea. So our asset allocation is within our newsletter, so read all those. I'm not going to read you all the figures in a data table. A, we'll be here too long, and B, you'll be asleep. Fund performance then. So in the short term, risk 3, we're looking at 3.6 in 3 months and 7.4 in a year. So that's a low, cautious portfolio with a 7.4% 1 year figure, which is very nice. A risk 5, we're looking at 12.6 for a year, and a 10, a similar high. What else have we been looking at over this period? Well, there are things, we call them fund blowouts. They might not necessarily blow up or blow out, but that's what we call them. They're changes in funds. They've either gone on clamps, they've had a change of name, a change of objective, or something's happened to them. So in January, we had an objective change for China Equity Fund. We had a name change for Canada Life Sterling. We had another name change for an American equity fund, another one in February, May, and 2 in June. So there's quite a few things going on there. So what are our solutions? What are my solutions for this particular period? Investor behavior, it's the biggest influence on someone's investment performance. It's not charges, it's not performance of the portfolio, it's their behaviour. And what I mean by that, when the markets go down, they'll look to sell out. When markets go up, they'll look to buy. That behaviour is going to, sort of destroy your wealth. Or the opposite is buying low and selling high. But buying low, it's just easy to say, but so hard to do. Just no one wants to do it. Very few people want to do that because they think that it's going to carry on going low. But I say to people, remember, the boats always come back, and they always do. Our portfolios are spread. They're spread in different assets, different funds, different stocks within the funds. There's thousands of them in there. They always come back. So if you're nervous and you're on the wrong risk, don't jump off the boat while it's at sea, because your money will go all the way down under the water and you won't find it anymore. And it's unlikely that you'll return from the sea either. So wait for the boat to come back. It might feel a bit hairy, but when you come back in, we can always change your risk to a different level. The reverse is true. If you feel the ride isn't going fast enough, we can always get you on a faster one as well. When we're looking at portfolios, there's always a phrase that kind of reminds me of how people are, and it was Sir Isaac Newton, and he said he can calculate the motion of heavenly bodies, but not the madness of people. So that's a great phrase from him. So in summary, if you're looking to outpace inflation, with inflation at 2.8 and you can get cash at 4.9, you could do it in that way. It would be a short-term strategy. For those looking at a longer-term strategy, then a low-risk investment is going to do that for you too. Most people will, as I say, will buy at the top and sell at the bottom, losing their wealth in that process. Markets today are high, with the FTSE at 10,512, the highest FTSE ever, 10,900 in February. So crucial to weigh up the potential gains, the timing and moving of funds, and maximising the returns whilst managing the risk. As always, if you have any questions, do let us know. Get in touch. Be delighted to help. Thank you.